CF Benchmarks.
You're actually calling in from Singapore right now, Jeff, is that right?
Yes.
There's something going on with Singapore and the ability to offer monochrome products in Singapore. Maybe now's as good a time as any to sort of like maybe flesh that out a little bit if you want to.
Yeah, like we're one of the first Bitcoin ETFs in the world, and definitely the first one in Australia to be registered under the unrestricted schemes under the Monetary Authority of Singapore, MAS, over here in Singapore. What it means is that the Monochrome Bitcoin ETF and the Monochrome Ethereum ETF is open for accredited investors in Singapore to subscribe directly. Also works for in-kind as well, and also on-market subscriptions and redemptions.
That sounds pretty amazing. And obviously that puts you, if you like, nominally even deeper into the Asia-Pacific region. Is that part of the strategy as well? I mean, I know it doesn't necessarily translate across domiciles, but in terms of visibility, that seems to suggest it does provide a little bit more of an edge. Is that part of the intention, or is it Singapore specific in this instance?
Well, I grew up in Southeast Asia. I was born in Malaysia, studied in Malaysia, and then I studied in Singapore. So it's a place that I spent most of my time growing up in before I went to Australia. So it's always been day one by design that this is something APAC specific, eccentric is what Monochrome is always going to become. And Australia is a very good bit to start where what we have today, which is the ETFs, just because it's sort of a balance between regulatory resilience and also the innovation approach that the regulators take here. The great example is that we're the only place in the world that allows in-kind Bitcoin ETFs to exist. And this is something that is a huge milestone in the history of Bitcoin, because it's the first time where Bitcoin can be directly interfaced and bridged directly into the TradFi wall without going through intermediaries or exchanges or banks. That is something remarkable.
You're listening to CFB Talks Digital Assets, the home of informed conversation about crypto for institutions building the future of finance, brought to you by CF Benchmarks, the world's largest crypto index provider. Hey everybody, thanks for joining us for another episode of CFB Talks Digital Assets. I'm Ken O'Deleger, Head of Content, and as usual, I'm joined by my colleagues, Gabe Selby, who's the Head of Research, and Mark Pilipchuk, who's our Research Analyst. And today, we are delighted to welcome Monochrome Asset Management back to the show. Monochrome is obviously one of Australia's longest-standing regulated crypto-focused asset managers. In fact, one of the first established of the kind in the wider Asia-Pacific region, if we're looking more broadly. So today we are excited to get a chance to hear an unmatched in-depth perspective from two top Monochrome executives, Mr. Jeff Yu, who's the CEO, and Mr. Grayson McLeod, who's the Chief Operating Officer. Guys, thank you so much for taking time out from your schedule for joining us.
Thanks for having us.
No worries at all. Thanks, Ken.
Brilliant. Right, so as mentioned, Monochrome Asset Management, founded in 2021, was among the first wave of institutions within the regulated perimeter in Australia, offering digital assets in the region, and one of just a handful of pure-play Australian crypto investment managers too. Their main product, the main two products, are Bitcoin and Ether ETFs. Monochrome Bitcoin ETF, IBTC, the ticker, inception 2023, uses the CME/CF Bitcoin reference rate Asia Pacific as its reference price. And Monochrome Ethereum ETF, trading since 2024, uses CME/CF Ether dollar reference rate Asia Pacific as its reference price. So we're obviously going to talk about that as well. Of course, Australia is one of the most significant markets for capital allocators in the Asia Pacific. I think $4.5 trillion in retirement savings. Clearly, we'll get onto that as well, because that has major implications for Bitcoin and Ether and beyond. So guys, IBTC, Monochrome Bitcoin Trust, is a great place to start, chiefly because it's a great success story. Now, after 18 months of being on the market, it's instructive to take a look back and see what insights we can distill from that. Firstly, I think it's still justified to call it the first spot Bitcoin ETF in Australia to hold Bitcoin directly. Now, there was some controversy about that a little while back, but I'd love on this occasion, which is where I've been waiting to actually months to ask you this, actually, Jeff, give you the opportunity to pinpoint the status of IBTC versus a bunch of peers and it's the exact structure of the Bitcoin holdings that IBTC holds relative to other peers who may not do so. So please take it away.
Thanks, Ken. I think like from the end user's perspective, end investor's perspective, it's very important to make the distinction between a direct held Bitcoin ETF versus a feeder type Bitcoin ETF. The former, which is IBTC structure, directly holds the Bitcoin on the fund level, which requires a additional layer of regulatory approval on the license to do that. The latter, which is the feeder type, is a bit more traditional feeder fund style, means that it fits into another investment instrument. There's very little perceptive differences around it, but structurally, in terms of pricing, in terms of the operations of the ETF, it can become a bit more complicated as you layer more funds into that. So Monochrome Bitcoin ETF and the Monochrome Ether ETF do not have any sort of sub-trust or layering around the ETF. It's just directly holding the asset. And because of that, it's also the only Bitcoin and Ether ETFs in the region and probably in the world that investors can do direct in-kind subscription. It means that they can deposit Bitcoin directly into the ETF and get ETF units issued the second day. So it's not just for market makers or authorized participants that you see in the US, it's for everybody. So I would say that the differences are very subtle, but as you go deeper and you sort of understand a bit more, the flexibility of a direct Bitcoin ETF becomes a bit more apparent.
Yeah, and you've been, if I may say so, quite passionate about pointing out that difference, and I think rightly so. It's clearly at the very, very obvious salient level another layer of administration or bureaucracy that these funds that are structured in this way are actually, basically exhibiting. But I believe there also are material impacts or potentially material impacts from that type of structure versus the IBTC structure and other direct holding vehicles like that. Could you give us an example of a way that an investor, basically the way the quality of the investment can be impacted for the end investor from investing in a sort of a feeder like this? And there's many examples, we don't need to name them. But what is the sort of outright impact on the investor?
I think you can summarize that into 3 key points. One is pricing. Pricing means that how close the ETF is able to track the underlying asset, which is Bitcoin. It's harder to do so if you have another fund in a different jurisdiction that operates in a different time zone, that strikes at a different benchmark at sometimes, to then have a close enough tracking to justify holding a Bitcoin ETF versus holding Bitcoin. Whereas with IBTC and IETH, they're both directly holding the Bitcoin, and they both just have one benchmark to reference against, which is the CF benchmark, BRAP, and also the Ether one that we use. So it's something that subtle, but some investors care about it. In particular, the institutional investors is looking at tracking error as a very important metric when they select Bitcoin ETFs. But also the ones that retail cares about a bit more is how safe is the instrument. So having more layers, like you mentioned, that adds a bit more counterparty risk to the investment. It also brings in jurisdictionality arbitrage potentially. So what I mean by that is that, for example, if a Bitcoin ETF in Australia fits into a Bitcoin ETF in the US as its underlying, so if something happens or there's very little sort of legal and tax clarity in terms of what the investors would have to go through if there's a regulatory change with a particular jurisdiction and how it affects the entire fund. So whereas a directly held Bitcoin ETF, it's very clear and simple. It's only within that jurisdiction, and there's no underlying fund. There is no counterparty risk that is outside of Australia or outside of the fund. And also the third thing is just with a direct held Bitcoin ETF, there is more flexibility on a product layer. So for example, a couple of months after we launched the ETFs, we've released the function for all investors to subscribe and redeem Bitcoin and Ether from the respective Bitcoin ETFs and Ether ETF that we run. And that is something that appeals to more of the crypto native investors, people that already have Bitcoin, or people that cares about the ability to take the Bitcoin or the Ether out to self-custody in the future if they want to. And you can't do that really with a layered master feeder sort of type structure, because they don't hold Bitcoin in specific terms. Like literally the fund will say that it doesn't hold Bitcoin, it holds another fund. So that becomes a problem when someone decides to, say, diversify out of the holding structure they want to, without getting into a lot of legal and tax problems. Yeah.
Yeah.
So that I wouldn't get into the details because we're not
No, sure,
tech
sure.
specialists.
No.
But yeah, it's like the bare trust
Yeah.
structure that we chose for both IBTC and IETH means that the investors always have absolute, what the taxation office in Australia calls absolute entitlement. So legal and beneficial rights
Yeah.
to the asset.
Yeah.
Means that when it goes from your wallet into the ETF under the same person or the same entity, there is no change of ownership. There should not be any tax implications when the process happens in or out of the ETF in kind.
Absolutely. And you mentioned potential arbitrage, and of course tracking. And people, you really don't need much prompting to remember that markets are aggressive, and very enterprising. You leave any sort of like a margin, if you like, on the table or in the open, it's going to be, potentially attacked. It's going to be potentially gamed, right? And you talk about tracking. There's an amazing, we've got some amazing information about tracking later, which we'll touch on when we get into the meat of the show. But on a more positive, more outright positive note, Jeff, IBTC last year crossed the US $100 million AUM mark, which is pretty amazing, a material and symbolic and indicative milestone, with, I believe, assets currently sitting around $160 million. So, what's your perception? Because clearly there is some momentum now. What's your perception of what the specific drivers are for people preferring IBTC, which is clearly happening? And, that would obviously inform us a little bit about what you think will drive the next $100 million of AUM.
Yeah, I think in sort of TradFi, that $100 million mark is always a thing that people celebrate because it's a proof of product market fit. It's a proof that an investment is no longer just a baby, right? And we've always seen IBTC as something that is a market leader just because of its structure. We're not a 50, 100-year-old establishment that has 1 million clients, but to have that growth for a 5-year-old company like Monochrome is definitely outstanding. Teams put in a lot of effort, also with our service providers, with you guys included, and also the regulators have been very supportive of what we have built. So I would say that like the next 100 million would come a lot from the Asia Pacific region, not just from Australia, and just because that Monochrome, the Bitcoin ETF, has become a option for people, even funds and digital asset treasuries, as the underlying, whether they're based in Australia or not. And we've seen inflows in kind or on market from investors from across the region.
I'd like to talk a little bit more about the digital asset treasury space that we're seeing there in Australia. In the US, we saw it really pick up last year, and we've seen all sorts of flavors of instruments, debt-linked instruments, preferreds. We've seen tokens going all the way as small market cap is under $1 billion. What does that look like in Australia for you? What are you kind of seeing, and where do you see that space headed there?
There are a couple of digital asset treasury plays that are based in Australia. And I'm not keeping track of how many of them there are, but there definitely some of them uses IBTC as its underlying. So it's cool to see. It's probably attributed to the fact that like we have one of the lowest fee structure and also the most flexible sort of redemption creation structure, which I mentioned in kind earlier. So it's very unusual for an ETF to have that regardless of asset.
I'll just add also, what we're seeing at the moment in Australia is definitely a delay effect whereby the ETFs got launched and now it's time for these institutions, these companies to go through their investment committees, check all the boxes such that they can start doing this. We've definitely seen quite a lot of actual small buys, million, 2 million here and there. But overall, the flavor is, a lot of these companies have a Bitcoiner inside that'll be going, look, come on, guys, we need to do this and let's get moving. So it's cool to be part of these conversations too, because a lot of the time they'll come to us and say, hey, we really want to have a Bitcoin allocation or an Ethereum allocation in the company. Can you work with us to try and bring this documentation to the committees and et cetera, et cetera. So I think I'll add another point on that. In Australia, it's a slightly different investment landscape than in the US. And the US was definitely predisposed to having a quicker onboarding for these types of companies. So, time and time again, I sound like a broken record. Australia does follow the US in a bit of a lag, and that's definitely what we're seeing here. So, I think to an extent, a lot of that delay will be coming into 2026, which is definitely something we're very excited for.
Yeah, and with your in-kind create redemption mechanism, how are the companies actually allocating? Are they going out and buying spot Bitcoin on their own and then creating the ETF units, or are they just going onto their through a brokerage platform and purchasing the ETFs? What does that look like?
Yeah, so the majority of it is on the brokerage and then out. We can go into this detail a little bit later and how exactly it works, but yeah, you've hit the nail on the head there. It is essentially the first ETF in the world, which also acts as sort of a quasi OTC desk. In Australia specifically, there was a pretty big situation that the industry coined it choke point 2.0, where essentially banks would limit not only individuals but also companies from buying through an exchange. So that would limit you to like $10,000 a month, something to that nature. But the beauty of our ETFs is that because it's through a regulated pathway, because it's through brokerages, et cetera, you can buy unlimited amounts. The market makers have to step in to facilitate these trades, and you can just take the Bitcoin or the Ethereum out the other end. So it's a highway with no speed limit into the asset class, which is very cool. And yeah, we haven't seen anyone else facilitating it daily like we do.
Are you able to see the details of who are the people that are first-time crypto allocators entering the fund versus maybe people that are, have been, already sitting on some Bitcoin and they're now just moving it into a different vehicle like an ETF? Are you able to see that kind of detail broken out, or do you have that information?
A lot of it just comes down to conversations with these entities and individuals, right? It's not something that we can directly go in and chain analyze or whatever. A lot of it comes down to conversations. It's an interesting question though, because a decent majority of our volume is from new players that have come in that have just said, look, I've wanted exposure, but I'm under no illusion that I'm going to be at risk for debanking, or I've seen exchanges blow up. And this is the first time that, I can see an actual crypto product that allows me to take custody of that, but I'm also comfortable with to buy through my brokerage. It's pretty like the way I like to think about it is it turns your brokerage account into a cold wallet. Yeah.
That's brilliant. I do want to touch on the other key monochrome crypto product, which is, of course, Monochrome Ethereum Trust. IETH is the ticker, because again, just like IBTC, it was Australia's first direct holding ETH ETF, launched on the Cboe Australia 2024. As of late 2025, early 2026, still basically of that status, right up to date. Now, I want to get into some of the features of this product, Grayson. But before that, let's talk about culture. Let's talk about the landscape, because obviously, no one is under any illusions that Ether and the Ether ETFs across the board, not just in Australia, but certainly in Australia as well, are of smaller, size in terms of assets. Now, that could be down to all number of things. We all know the familiar stuff about, education messaging. But what I want to ask you is, basically, the chief operating officer of one of the key crypto investment management firms in the region, what is your optimal portfolio framing for an investment committee, or any sort of major serious investor? How would you actually put it to them to get over those barriers or get over across that education threshold? And on the other side, what is the kind of thing that you downplay in terms of the misconceptions that people generally have?
It's a great question, and I think it's very fitting for the current landscape that we're in. The narrative is definitely, matured quite a lot. I think back in 2016, 2017, there was this sort of competition between Bitcoin and the Ethereum type infrastructure plays. What we're seeing now is less of like Ethereum is Bitcoin 2.0 and more of a gold versus Apple stock situation, and the market is definitely taking that on board. At the moment, I think there's this lag where Ethereum hasn't picked up as much as Bitcoin. And by the way, that is just completely, what's the phrase I'm looking for? Comparison is the thief of joy. Like across the board, the Ethereum ETFs still have done
Yeah.
pretty well.
Yeah,
Yeah.
have, yeah.
So realistically, what we're seeing right now is sort of the emergence of all this tokenization plays, the stable coins. A lot of that feeds off of Ethereum and these, infrastructure networks. And in a portfolio, what the advisors and the allocators are saying and doing is looking at it once again like that tech infrastructure play. So we've seen a few tokenization funds pop up already. Probably the biggest, most notable one is BlackRock's ETH. They tokenized
Yeah.
treasuries, I believe. I mean, for them, that was just a test case, really. That was just them playing around, but it's
Yeah.
working, and I think that's sort of the shot heard around the world in terms of real world assets, quote unquote, being put to use through Ethereum infrastructure. I don't like talking
Yeah.
about ETH versus Bitcoin overall. I think it's Ethereum and Bitcoin, but
Yeah.
once again, it's
Yeah.
important to separate the two. Yeah.
Absolutely.
A lot of the tokenization stuff and everything, it's really, we're waiting on a lot of regulatory framework. And here in the US, we've seen some tokenized equity products that are available to non-US investors in Europe and parts of Asia and everything. And to me, that's almost more interesting because the US capital market's pretty liquid and spreads are pretty tight and it's pretty accessible. But over in Australia, what's the regulatory environment like on these tokenized stocks or tokenized ETFs? Are you guys close to having that stuff available, or is that still a few years off?
Look, it's once again, Australia just lags behind the US in this area. We sort of just have to wait and see. We have had conversations. We would like to see it progress, but ultimately it's up to the whim of ASIC. But I think they're pretty forward looking overall. It's not a matter of if, it's definitely a matter of when. So, we just got to keep our finger on the pulse and keep pushing.
I can add something to what on the assets organization play that we see as well. So people that know my background knows that like I used to run a crypto exchange. So I kind of have this shared perspective of running a new kind of asset exchange versus the security exchanges that we see around the world. So there's definitely efficiency differences between the two. And we have a global innovation team in Monochrome that's actually looking at building something to fit that need in that market. So that is something outside of the ETF that we've been passionately working on. And at the right time, we'll tell more about it to the world.
Now, we did mention this earlier. We touched on it a little bit, and it may apply. I'm not 100% clear, guys, to IBTC as well, but I know that it definitely applies to IETH. Dual access, which is, in a nutshell, both a listed and an unlisted pathway. So, two pathways to access this vehicle. Can you explain to us what that is exactly and what investor types these facilities are designed for? And also, what are the benefits?
Yeah, cool. So dual access is essentially exactly what it says. There's two pathways into or out of our ETFs. The first one is the on market, which is your standard brokerage exchange type deal. And the second one is off market, which is directly with our unit registry. So the reason why we did that is to actually facilitate the in-kind side of these ETFs efficiently and properly. By having that off-market side, whenever we get a creation or a redemption request from an investor for the physical assets, we work with the unit registry to actually facilitate that. There's a number of checks involved. We want to make sure that the person who's redeeming is actually who they say they are, and we want to make sure that the Bitcoin or the Ethereum is actually going to the right address. And that's all managed with the custodian. And it's decently hands-on, and there's definitely a trade-off between speed and security in this instance. But overall, that off-market pathway is really what facilitates the ace up our sleeve, which is the in-kind facilities.
Yeah. And do you find that it's bi-directional in terms of investor, utilization of that pathway? Like, for instance, people maybe do they come in and buy the ETF outright, and then maybe sometimes go to the unlisted route? And what are they trying to achieve? It's a great facility, obviously, but I'm just trying to imagine in my mind how people would utilize it
Yeah.
optimally. Because clearly, as far as I understand, it's not necessarily something that you're going to find from many firms, right?
Yeah, no, for sure. And it's definitely a learning experience for the market because it's so new. The ability to buy on your, for example, ComSec account. ComSec is the probably the biggest brokerage in Australia. Buy Bitcoin on your
Right.
ComSec account and then withdraw it. So the off-market facility is not separated from the on-market. You can actually transfer your IBTC and IETH units between the two, and that's how this OTC desk is actually facilitated. So what we see for the most part is people buying through their brokerages on market, transferring that to their off-market account, and then withdrawing. So that's how it works. And like at first it's a little bit weird because coming from the crypto side of things it seems very seamless, but in tradfi there is so many more regulations and things you have to adhere to, and ultimately it's for investor protection at the end of the day. Once again, we want to make sure that the person wanting to redeem is actually who they say they are, and more often than not these are some pretty big trades. So, it's critical that we follow the rules and we make sure that the investors are safe.
Brilliant. And I just want to continue monopolizing you for a little bit longer, everyone, Grayson, as well, because I want to, really do want to make sure we surface some of these facilities that you do offer. A bit of a sidebar, maybe, but tracking.
Mm,
Now, I think you guys are among the only or a handful of firms that actually publish tracking
yeah.
of their Bitcoin and Ether ETFs. I don't think I've seen it anywhere else. And to me, to my uneducated eyes, the tracking looks pretty amazing. For IETH, the Ether fund, the last check was 0.0014% minus. So just a sliver, a molecule lower than the underlying. And I think it was like a similar figure for the IBTC, the Bitcoin ETF. Now, my intuition, of course, tells me that that is actually a really good result. Hopefully, you can confirm that. But then, of course, how much would you say of that is attributable to the benchmark, which is, of course, in your Ether fund's case, the CMECF Ether dollar reference rate Asia Pacific variant?
Yeah, no, it's a great question, and it is definitely at the top of the list for anyone who wants long-term exposure held in an ETF. The tracking is probably the thing. The
Yeah.
point to make here is tracking is not just a point in time. It's actually a compounding situation where if you're holding this for 5+ years, which per the product market
Mm.
determination you should be, it does blow out. A good example actually is the old grayscale funds where if you held it from
Oh my
2017
goodness.
to like 2021,
Yeah.
you have actually just round tripped yourself in terms of price and you had like zero gains. I mean that's a
Yeah.
pretty bad example, but it is very crucial. Like the aim of the game here is to actually just track the price. It's very simple, but once again, it's a hard thing to do. And the tracking comes down to three things. So, like you said, the benchmark itself, how robust is it? How clear is the calculation methodology? How liquid is it at that time of calculation? And, how transparent is that? The second thing is the execution methodology. So, this sort of feeds into the benchmark, whereby because we have such a good benchmark that is clear and verifiable, you can go see the methodology. What we actually do is we work with our OTC desks to execute our trades exactly at that same price. So they can target that 1 hour window, you know, it's 12 partition
Mm.
TWAP, or, I mean, Mark or Gade, you guys can probably talk about this in a lot more nerdy detail than I can. But essentially, they mimic the whole calculation process as a trade. Thereby, we can actually get filled at the exact same price. So the execution, the tracking, and then finally the management fee. So as a rule of thumb, like
Yes. Yeah.
it very simply put, all funds will track yearly minus the management fee. Obviously, that's not the case. It's not as clear cut as that, but that is at least the benchmark to beat. So our management fee is the lowest in Australia, and I think it might be the lowest in APAC overall. Jeff, you might have to fact check me on that one. But nevertheless, that's a big reason why our tracking is so spot on, and a reason why, it's not just down to, oh, big fancy TradFi company's got a Bitcoin and Ethereum ETF. That's the one. Like, there's a lot more to it than that. So the big three of tracking is execution, management fees, and the benchmark.
Indeed, indeed. And just finally, before we move on from the key products, Grayson, I want to get you to again surface something which seems pretty unique to me. I don't think any other firms that I've heard of have actually offered this. The portfolio transfer facility, which is what you guys call it. Give me the lowdown on that because I think it's really important.
Yeah, so if someone's holding Bitcoin or Ethereum, let's say from 2015, and now they've got $10 million sitting in their sock drawer in a ledger, they can actually elect to transfer that into our ETFs. There's a number of reasons why they want to do this. Ultimately, it's sort of a situation where there's so many advantages that we struggle to clarify them and separate them all out. But I mean, just
Yeah.
to list from top to bottom, having it in an institutional custodial situation whereby typically the biggest risk to your
Yeah.
assets is the dude between the chair and the keyboard, right? But in this case, we work with Gemini. They're great. We see their Deloitte reported SOC 1, SOC 2 operational reports every year. They're very clean. These are things that go right through the whole operation of the custody situation. And it's an extremely clean process, and it's very cool, and it's all multi-sig and all the things that you'd want to see and try and mimic yourself if all we had to do was that, but we don't because our lives are busy. But yeah, so people put it in for that. Another reason is because, you know, you have this off-market transfer in facility, and then you can put that on a brokerage and sell down. We've actually seen quite a bit of that. So people that have held these assets for quite a few years, now it's time to take a little bit of cream off the top. So I can then sell it through my brokerage account straight into my bank account, and I'm not going to get questioned, and I'm not going to, be imposed with bank limits or debanking risks because I've got money coming from some unregulated crypto exchange, which, we see a lot of that here in Australia. Once again, that choke point 2.0 situation. So yeah, it just offers a lot of more clean offloading situation. And the third and final thing, which is very cool, is this introduction of borrowing against your crypto. So this has sort of been the flavor
Right.
of the month
Yeah.
for quite a while. People are trying to figure out lending solutions to Bitcoin. Up until this point, it's really just there's some company that's located in the Caymans, and I'm just gonna give them my Bitcoin or Ethereum and hope that I get some cash back. And most likely that's going to be rehypothecated and mucked around with. There's no shortage of examples there, but in this case, what we're building at the moment is this bridge between, if you've got Bitcoin, you can put it in our ETFs. It then becomes a security. Generally speaking, there's no tax event in that either because of that bare trust. And now I can borrow against that, right? Not only can I borrow against that, it's actually at a standard, banking rate that you would want to see. And the kicker is
Mm.
your Bitcoin never moves. Once it's in the ETF, that's in cold storage. The only thing that moves in this situation is the units themselves. They just go to a securities custodian. But, when was the last time you heard of, I don't know, Perpetual or JP Morgan, like taking someone's units or losing someone's units? Like that doesn't happen, right? So
Yeah.
you
Yeah.
completely mitigate that rehypothecation risk purely because that Bitcoin and Ethereum still sits in the audited, regulated cold storage. It never moves. And I probably sound like a broken record because I keep yapping about this.
Not at all. Not
Yeah,
at
this
all.
lending
No, it's
situation.
important.
We've
Yeah.
done a few
Yeah.
different types so far. We've got a couple that are really cool coming up, and I'll probably get in trouble if I spill the beans too early. But yeah, keep an
Yeah.
eye on this space because it's very exciting.
I want to actually get the experts on our side, Mark and Gabe, in on this financial engineering potential, which you basically opened up as a new vista, guys, because of this facility, almost like a new primitive here. Mark, does anything about what Grayson just said strike you as being opening up some pathways which we've constantly striven for in crypto, but because we're on the sort of like outside of the regulated perimeter, it becomes a little bit problematic. How is that landing with you?
Yeah, I mean, once we get your Bitcoin into a marginable security, there's all sorts of things you can do with it. In the US, the things we've seen that are really popular were the basis trade all throughout 2024, where we saw the futures basis blowing out to 20-30% when you get a large move. That's been pretty attractive for hedge funds to come in and harvest. And if you're a large individual investor, you can do that too. The other thing we've started to see with the options market really opening up and getting much more large and liquid are this rise of these covered call strategies. So we saw BlackRock just filed one the other day for us. Are there options tradable on the Monochrome ETFs?
In Australia, it hasn't really happened yet, but we do have a structured product division in Monochrome that deals with unlisted versions of that fund. So cover call strategies, talked about that. Yes, we do have that. We do have principal protected notes. We do have leverage notes, but they're all only for credit investors at this stage. And they're all based on Bitcoin options that are traded in the US. It's something that's sitting outside of the ETF because by trading options, you don't actually have custody or need to worry about custody of the Bitcoin, which appeals to some investors. But that is a different segment of demand and market because, for example, for the PPNs, the principal protected notes is for investors that are a bit more sensitive towards the volatility of Bitcoin, but still wants exposure to it. And also on the other spectrum, we have also some investors that want leverage on the exposure, but they're also accepting a bit more risk to their holdings as well. But I think this is a market that we're paying a lot of attention to, and we also have a lot of like product knowledge on as well. So whether we eventually will turn it into a listed product option or whether there's the demand for that in Australia, we're still deciding on that. But we definitely do have traction on the credit investor side for products like structured products that we're really running.
Brilliant. And yeah, that does touch on a lot of what Grayson was mentioning earlier, and just the general principle of basically bringing your Bitcoin into a regulated environment that is beyond the reach of the prying or not necessarily the prying eyes, but certainly the sort of grasping hands of the ASICs and others who are concerned about what's going on is very powerful. So that's one level, one sort of layer of the intersection, the nexus of our worlds and the TradFi world, the coming intersection. I think what I want to do now is broaden it out, guys. Let's talk about the broader Australian investment landscape, because obviously over there in Australia you have this vast superannuation fund framework, and where the key question for a lot of people involved in this space is how is that integration going to happen and how quickly is it going to happen. So let's move to you, Jeff, if you don't mind. Where are we in terms of that grand project, if you like, of greater allocation from superannuation funds, whether that be the SMSF sort of world or the sort of industry supers, retail, the public sectors? There's obviously a vast untapped potential of capital there. What is the general tone of this world right now? Where we are, in your view?
Yeah, so Australia has basically, if you summarize the retirement industry in landscape, there is what we call self-managed, and there's no one is more
Yes.
paternal, means that like you leave it to a big company to do it for you. That's where the retail industry super means. Most
Yeah.
people contribute their super to what the latter, which is a paternal decision, and then a lot of high net worths are choosing to elect self-managed options to access specifically Bitcoin in their super. So we've seen this happening over the last couple of years. It has been a thing even before the ETFs, where self-managed super fund, which we shorted it to SMSF, have been allocating some of the investments or deploying their cash into Bitcoin and then holding the Bitcoin in a cold wallet. There is very specific mandates on how you can acquire and hold crypto in an SMSF. That's why when the ETFs emerge, it's become such a interesting swap of people moving that holding from a cold wallet into an ETF, because auditing security wise, it's a bit more straightforward if you just hold a security. And also, it's also like something that people are seeing is that I can then use that to do more things, like just we mentioned. The retail and industry super, they're definitely looking into that. There's whispers around the corner that some of the super funds has been dabbling themselves into that. But in terms of where I think we would see a mass scale adoption, it still comes down to the overall demand from the members, because like we're still in no illusion that crypto is still not a focus area for most people in the world, right? Obviously, we're in this space for a long time. We have conviction in the asset class. We understand what this asset class means for ourselves and for the world. But most people just generally not tuned into that yet. Like we've seen a lot of rush to gold and safe haven assets, traditional safe haven assets, in a time where geopolitical landscape is on its highest in recent times. There's a lot of trust eroding from traditional government-backed instruments, whether it's bonds or currency, property. It's something that is declining in terms of popularity in even the younger generations, right? People are generally not as interested as entering the property ladder as their parents, partly due to affordability reasons and how sort of the asset has blown up over the years. So people see crypto as long as there's consistent demand and feedback from the members to discuss superannuation. They have all these AGMs, all these events across the board that people can sound their opinion to. The more we see that happening, the faster we'll see the big super funds starting to allocate into Bitcoin and Ether.
For me, we kind of look at the investment committee decision of entering digital assets in the US. It seems to be primarily focused on Bitcoin still. And that's because you're seeing, I think, some Ethereum hesitancy. And there's a few different reasons for that. But I wanted to get your guys' perspective. If you're down in Australia, you're also seeing a little bit of Ethereum hesitancy at those investment committee levels. If there is, does it fall under things like educational gaps, or, they not quite understand the investment thesis of something like Ethereum versus more of a store of value thesis with Bitcoin?
Yeah, it goes down to what Grayson has mentioned earlier, is that there is a communication, educational issue that has been brewed over the last decade, or close to a decade, is that people think that Bitcoin has competition within the crypto space or where it sits. But in reality, Bitcoin is Bitcoin. Bitcoin is a monetary asset first before it's a technology tool, right? Its priority, it's being a safe store of value. It's more resilient than any crypto assets out there, but it lacks in terms of flexibility and functionality as a trade-off. So there's nothing wrong with that. It's like, I don't build my window panels with gold, but I will find gold as a safe haven asset if something happens versus aluminum blocks, right? So Bitcoin and Ether kind of plays that role in the digital asset landscape, whereas Bitcoin plays as money and Ether plays as tech. So it's a very different narrative, and also enhance investment outlook into their mandates on these two asset classes. The smart investors are seeing this as a way to sort of like arbitrage too, because there's always money to be made when there's confusion. But Monochrome has always been education first. One of the first things that we did when we set up the company is to launch a research arm on a Monochrome research. We've published I think countless of articles on educating the market about the differences and the risk. How do we measure and deal with risk, value, valuing Bitcoin, etc., regulation, even ESG. So we've always been very pro education, and we do a lot of workshops and also closed room conversation with other industry peers, and also including super funds, to bring them up in terms of the knowledge gap that we have. We have the privilege of starting early, but it's something that benefits all investors and the market and the industry if we all get up to that same level of understanding of the asset class there. We're going to invest it, right? So I'm always in the camp of only invest in things that you understand, and this is a perfect case. Like, a lot of people hurt themselves in crypto not because necessarily the asset class or the provider. It's always because they're investing into something that they're not particularly clear on, and you can't really blame them because there's a lot of FOMO that's been generated, fear of missing out, when a certain asset class is being pumped up. And I think that's not going to go away. We see that with gold, right? It's like gold's been rallying really consistently over the last 2 years, and we see people starting to buy into gold products that are, somewhat of you can say that fraudulent. Just because that when something is rallying, there's tend to be bad actors that slips in and try to convince an alternative way of investing that is not really safe,
Mm.
right? So yeah, let's do more of this podcast. We hope that more people watch it, and let's educate the market more.
Jeff, I did want to make sure that to give you the opportunity, we were talking about superannuation funds and SMSF, the self-managed superannuation fund. The facilities and flexibility that Grayson has laid out about the structure of your funds and the sort of approach that you guys take does seem to me to lend itself to an SMSF approach. I mean, does that make sense? Is it like, do you expect individual investors who are managing their own SMSFs and maybe, outsourcing expertise when they need to, are they going to sort of gravitate to solutions like the monochrome solution with all the sort of layers that you have available? Does that make sense? Is that something that's maybe is a
Yeah,
bit of a sort of edge?
it really is. So one of the biggest problems of SMSF is auditing requirements, and also as a trustee of the fund, you're obligated to make sure the assets are held safely and within a compliant framework. A lot of people make the misconception that crypto brokerages are regulated in Australia, which they're not. They're not regulated under any financial
Mm,
investment protection outcomes or regulatory bodies. So there's a bit of a misconception where people can hold crypto under an SMSF in an unregulated trading platform, which is a big no-no.
mm,
And then
yeah,
people do get into
yeah.
trouble for that oftentimes. And we've seen a lot of them rotating into, before the ETF, self-custody, which is a option that they can hold Bitcoin in a private wallet, and then they have to do declarations. They got to approve wallet ownership and constant visibility auditing, which might be not the flavor for a lot of busy investors.
For one,
High net
yeah.
worth investors just generally
Mm,
just don't
yeah.
like the hassle for if you're dealing with all this kind of stuff. That's why it's been we see a lot of them rotating into ETFs like IBTC and IETH.
Perfect, perfect. Yeah, so you touched on this earlier, Jeff, but Monochrome beyond Australia. You're currently in Singapore, and I read on your website that you have received from the Monetary Authority of Singapore, the MAS, the key financial regulator, addition to the list of restricted schemes for both IBTC and IETH or IETH. How does that work? What is it for? What's the outlook for it? What's top of mind after that? Sounds like a major event.
Yeah, I think it sort of stems out from the fact that like I grew up in this part of the world, so it's always been a dream to sort of bring something that I've built in Australia back to a place where I call home for many years. So the Monetary Authority of Singapore is basically they regulate financial products and access in this region in Singapore. So what it means is that credit investors from Singapore can access the ETFs, whether it's through the unit registries directly for in-kind or also on market through a brokerage. It's in a classification. It's very important to make a distinction. It's not available for retail
Mm,
investors in Singapore, only
right.
for specific accredited investors, because it's in the list of what they call as restricted schemes. But it's cool because it's the
Right.
first Australian Bitcoin ETFs. I think even for in the region, or one of the first ones to be included in that list. Yeah.
Right. And it sounds like a first step. I mean, I don't want to sort of, get anyone into issues, but it does sound like a first step, something that can be built on in terms of access and availability in Singapore.
yes, there's two parts to it. It's like one is that accredited investors can access it directly, but also
Yeah.
we can see that CMS holders, which is like a fund license holders, can actually then build products that have IBTC as underlying in a more free way. Because if you're dealing with digital assets in Singapore as a business, people would know that like it's almost impossible to open and maintain a bank account, because dealing with digital assets is considered a high risk activity by the banking network over here. But there's definitely certain leeways when the underlying is a product that is, first of all, a listed regulated security, and second of all, is approved by the MAS itself, which is the regulatory body that all financial services adhere to. So yeah, definitely see both activities happening.
Yeah. And to wrap things up, maybe starting with you, Jeff, what is next for Monochrome? The major banner plans, stuff in the pipeline even that you've got coming up for this year, whether it's in Australia or Singapore, indeed Singapore or anywhere else.
Yeah, like growing the ETF is definitely one thing, through in-kind or through on-market, both very exciting journey for us. Structured products that I briefly touch on for
Yeah.
credit investors across the region. And third thing, something that I touch on very lightly about, is we have a innovation team that is building what we will call the future for capital market listing that we will announce sometime this year.
Perfect. And Grayson, any closing thoughts at all? What's top of mind for you heading into the rest of, or the bulk of the year?
I don't know. My flavor has recently been, let's stop talking about this in cycles. And it's definitely a new paradigm with the ETFs and the execution ability, of uh, the amazing minds and companies that are coming into this space. Like, I think let's not get hung up on this industry's previous cyclical nature and think, oh, okay, we did well last year. Now it's time for a bear market. I think that's all thrown out the window now. So, very excited to see what this year brings. I know for sure, and on our side of the world, it's going to get pretty exciting. So, yeah.
Brilliant, brilliant. So yes, Jeff Yu, Chief Executive of Monochrome Asset Management, and Grayson McLeod, Chief Operating Officer. Thank you very much indeed for joining us, guys. It's been an enlightening conversation.
Thanks for having me. And Jeff.
All right.
Thank you. Good to be back.
Wonderful, wonderful. So guys, that was really, really interesting, getting that perspective from Australia, from basically some of the most expert and experienced operators in crypto, in regulated products in that region. Jeff Yu, the CEO of Monochrome Asset Management, and Grayson McLeod, the Chief Operating Officer. I hope you enjoyed the conversation as much as we did. If you did, you can find a whole host of other podcasts anywhere you listen, Spotify, Amazon, Apple, and so on. For the rest of our content, cfbenchmarks.com is where you need to go. After you've done all that, we'll see you again for another episode of CFB Talks Digital Assets. Thanks for joining us.
Thank you for listening to CFB Talks Digital Assets. This recording is for informational purposes only and should not be considered investment advice. This recording is not intended to persuade or incite you to buy or sell any financial products noted within, including but not limited to exchange-traded funds, mutual funds, equities, other instruments that reference any index provided by CF Benchmarks Limited, or crypto assets. Any commentary, interviews, and discussions are opinions only and should not be considered a personalized recommendation. Please contact your financial advisor or professional before making an investment decision. Note, some of the underlying instruments cited within this recording may be restricted to certain customer categories in certain jurisdictions.